So, hello, and a massive hello to everybody. Hope everybody's having a great weekend wherever you may be, whatever you may be doing. This is 50 Pips, rocking and rolling, 9th of July, 2017. Let's do this. So, can't remember if I said it. So, once again, no trade calls and recommendations or response for their own stuff. We're here for educational purposes only. So, heading into the week, I think we got some interesting data points with a lot of the CPIs out. We have a Bank of Canada decision. We've got Yellen testifying on Wednesday and on Thursday. And then going into the end of the week, we got retail sales with those CPIs again. So it should be interesting. But again, here the dynamics is how are these flows going to move into summer trade, possible geopolitical risk, still, as we've been highlighting for a long time now, still issues with liquidity, as we've seen on gold, as we saw on silver, et cetera, et cetera. So let's see what's going on. In terms of markets, our most interesting thing, or our main theme here, which we've been talking about for a long time, is that as far as we're concerned, something broke on the NASDAQ, right? So a couple of Fridays ago, we got that aggressive down day where we had that kind of mini flash crash on Amazon, et cetera. We start to see, weakness coming on. And our base case was that was the beginning of a bigger correction, right? So any rally off that or any strength on that was a sale, basically, and we think it's time to get that healthy correction. So what's happening here on the NASDAQ? So basically that was that day, right? And you see what's happening. We tried to rally, we got a nice sell signal there, and we closed back below that 50 DMA, right? So here, shorter term, what's happening? The market's keeping pressure on. It's holding below that 50 DMA, and it's holding below that range. So as long as the market can keep selling it off, we'd expect this to move down in extensions. We'd expect this to move down quite aggressively. But what we'd also like to point out that should we get back above the 50, should we get back inside this range, our base case is still that all rallies are a sale for a bigger correction to come, okay? Ideally, it holds this trend line, but we're going to be stubborn enough to say we're not wrong as long as those highs do not get breached from a day or a week closing basis, okay? What to watch for on the downside? You've got those lows coming in here in line with pretty much that 100 DMA. So right now stuck inside the 50, 100 DMA, and big bull bear line there. And we'd expect it to be choppy. So in the same way, we won't get excited with any strength into there. We won't get excited with any weakness into that 100. For us to be a little bit worried about the, that top holding, we need to get day closes above these highs and above that descending trend line. And for us to get, let's say, smile a bit more on the bearish case, we'd have to see a day close below the 100, and then we would expect to see a quick test of the 200 and these two support zones further down. So that's pretty much our base case on the NASDAQ. And, it's the same thing, very similar action on the ES. One thing you want to keep an eye out for, in terms of Russell, if you look at the IWM, it's been holding a little bit of a bid. So one thing to keep, an eye on, just in terms of a little tell, is if this starts to accelerate, because it's been holding a little bit stubbornly bid, I'd keep an eye on this. If this starts to accelerate lower on the NASDAQ, pressing lower, even if YM and ES don't follow straight away, but that will be an extra tell. If NASDAQ breaks, if Russell breaks, then we get more and more confident on a bigger and bigger retracement coming. What else have we got? The other thing which we feel is really the most interesting chart in terms of what that may mean for the market and what's going on here are the ZBs, right? So we got a close below that 200, which is fairly bearish, right? You always have to be careful when bonds trade like this because you can get some kind of like really nasty wick to the downside. But again, we're going to be stubborn on this too, and we're going to expect it to find some kind of a bid here. Now, it doesn't mean it has to skyrocket into 170, of course, but what we're saying is we're going to be very, very watching this very, very closely. Should we close below the 150 mark anytime this week, then we'd say this is looking extremely heavy. Those lows are clearly the target, and we would probably be in sell any rally kind of mode. But as long as we don't close below this 150 mark, and if we try and chop here, try and close back above the 100 DMA, then we think we could get some kind of tradable bounce. So that's something we're particularly interested in. What's happening in gold? So let's see, we got GC down here. Gold, interesting, moved all the way right back into this 50. Very, very aggressive. As we said, if the 200 goes from a day close perspective, then we would expect that 50 to print. Now, realistically, this wasn't very ideal if you wanted to get short, because ideally the way we would have looked at this, if we got a close just below that 200, that would have been a very nice asymmetric risk reward opportunity to get short with a tight stop above these highs, looking for the move back down. Now, unfortunately, especially for the way we look at the market, when you get such an aggressive move here, even though our base case is that 50s are going to print, this area is going to print, it's not shortable for us, because the risk reward is simply not interesting on any kind of interesting stop, right? So just have to wait and be patient. If it's going to bounce, this is most likely where it's going to bounce. Wouldn't be surprised to see some stops getting cleared, but here, day close below the 50, we would expect the 61.8 to print aggressively. If we start to stabilize, we would not be surprised to see that 200 get clipped again. In terms of silver, one thing which I wanted to say, again, very, very tricky action. Just be careful, because again, this is not the futures contract, but this is the ETF. But a lot of, let's say, traders with a little bit more gray hair will usually be very, very cautious when you see those big spikes in very low liquidity times, overnight sessions, because usually market kind of has a way, unless you give back, it's a clear fat finger and the market just buys it back. Whoever made a mistake buys it back straight away. Usually those highs or those lows tend to kind of be magnets, right, as the pain trades. So be a little bit careful. But of course, are you going to start shorting silver here? We're not. If you have to be paying attention, it doesn't mean, I think there were maybe some kind of scalp opportunities, but you have to pay attention here. It has to be one of the charts that's on your radar. I'd say be careful, don't be in a hurry to trade, but clearly this is extremely important support. Would not be surprised to see some stops getting cleared here, but again, this is an interesting support you have to keep an eye out for. CL, so we talked about crude. Oops, that looks messy. What's going on crude? So again, here, when this broke down, we were very aggressively short on these swings. We covered into those lows, and then we're being very, very greedy, all things being equal. Just also because you don't always get it right, but because of the way price was reacting to data, the way it was trading, we thought maybe we get a chance to get a nice little swing back in the 49s, 50. Here, it's just behaving extremely nicely, right? We had a retracement back into the 50, and it sold off right from here. Now, some people were asking me, when we were moving back into that, you've got the confluence of the 50, you've got the confluence of the 50 DMA. Hey, 50, why aren't you shorting there? That's classic thing we look at. That's pure. Well, the reason we didn't short was not only because of the context, because we thought if it was going to get sold hard here, this kind of supply zone, this would hold and it wouldn't make it up there. And maybe there was a little bit of not being mechanical and just being a little bit too cute, right? And again, I think that's something we all suffer with, as much as we like to pretend we don't. Everybody, sometimes we feel we kind of know more, we got a better steer on it than what the chart is telling us, and usually the market reminds us that we don't. Just follow the levels, follow the chart, they don't lie. So here what we've had is a fairly nice little sell, 50 back. So the only thing you could expect here is you'd expect these lows to get tested and for price to move back into the 40. Again, this is our swing still was calling for this level to get tested back in the 39s. And again, I think we just made a little bit of a silly mistake in hindsight. Hindsight's 2020. Probably should have got in there and be mechanical. Didn't, but we'll have to see what's happening. But one thing we'll be focusing on here, because we definitely don't sell lows, is if we can't break this early in the week and we try and move back into the 50s, then we'll look for a tradable little bounce, because we like to go both ways. Okay, no problem. I know somebody's going to send some comments in on that one, but anyway, so I digress. What else have we got here? We got a great decision out of Bank of Canada. So what's happening here? Well, this is all basically, is there going to be a cut or not, right? If you step back in a bigger picture, we've been talking about this whole, 136, 133, 130, which is a huge chop range, right? With 128 to the downside. And that was basically because where we started to build the momentum to try to press higher, which spectacularly failed here also with the help of talk of these rates, right? So here, the way we look at it is, it's kind of a binary scenario, but there's always three things can happen. Price can go up, price can go down, or price can go sideways. A lot of people forget the sideways. But here, what we'd look at it is that clearly after this kind of action, the way you'd look at it is if they don't cut, bounce, right? If they cut, could be continued down, but that's probably all priced in. Most likely sideways, or it could even be a little relief rally, right? Take profit. So see what I mean? The point is, if they don't cut, chances are it's not going to go down. You'd go sideways or up. If they cut, you kind of have the three possibilities, but most likely it's going to be sideways to up. So it just looks like the risk reward is basically favors trying to look for some kind of opportunity to trade to the upside, even if it's some kind of a scalp this week. Again, we'll have to see what's going on. We're really not going to be losing any sleep on this and not going to be in a hurry to trade. But if anything, if we trade this, most likely it's going to be to the upside this week. Another chart that's interesting, this might be going on a little bit too long. Let's do a couple more charts. Another chart which is particularly interesting for us is Kiwi, right? So basically it's stubbornly holding here, right? It's stubbornly holding. And what we've been looking for is price to come back below this descending trend line and continue a move back to mid, possibly back to the downside of the channel. So aggressive traders are already trading short here, but for other people looking for opportunities, clearly no traction here. This is a bounce zone. Daily closes below. This could get very heavy. So I think whatever you're doing, and especially if you're flat on this, is a very interesting zone here to either look for longs or short, depending which way you're leaning or depending if we close above or below on the day. But clearly, this is a chart where there's going to be something to do. And last but not least, cable. What's going on cable? So this is still holding our pattern. Remember, this was all that series of 1 hour candles on data, giving us a beautiful little short for a move back into the 126. You can go back. We discussed this even on shorter time frames in detail. And our base case is still that we're stuck in the 130, 128, 126 range, right? We're looking for opportunities to get short into 130, closes below the 130, move back into the 128. If it closed above repeatedly, you'd have to look for 132s. Now, this is our base case is in play. We're still looking for 128 to come right back in. It's struggling here at this 50. Have to look how this trade is. Our base case is still, we got unresolved business down, down, down. We've talked about this a lot. Shorter term in the week, as long as the 130 doesn't get recouped and we close above, we still expect any bounce to be a short opportunity for a move back into the 28, 128 being pivotal inside this range, below the 128, 126 to come fairly quickly. Okay, thank you so much for listening. Thank you so much for liking. Thank you so much for sharing. Again, anybody has any questions, hit me up by email. More than happy to try and pay it forwards and help anybody out if I can. Have an awesome rest of the day, rest of the weekend, wherever you may be, whatever you may be doing. Take care. Bye-bye, guys.